Plenty happening on the global front, especially overnight. And Andrew Freris, CEO at Ecognosis Advisory, joining us this morning. Andrew, great having you. Let me first start off by taking your view with regard to all that's happened overnight. There's US-China and there's the Fed. Where are we headed directionally in this global tete-a-tete of sorts, if I can call it that, between US and China? And how does the Fed bridge between inflation and the labor market? Give us a sense.
Let's take first the contretemps between China and the United States. Yes. This simply shows with big, huge capital letters in neon that any trade discussion with Trump is irrelevant. Okay, it can change overnight. And of course, the Chinese played straight into his hands by effectively controlling completely the exports of rare earth. China provides about 80% of all that it's being used, and the United States is frantically creating and expanding and investing quite a lot of private money in their own mines and processing of rare earth. So this was just a sideline simply to show you that we move from friendly chats to we're going to put 100% input duties on China, and China, I think, unwisely, did this at this particular time. So if I look at the trade situation, I will tell you anything goes. Don't bother to do it. There is nothing to discuss. There is nothing to forecast. Tomorrow, everything is going to change again. Now, as far as the rest of the issues are concerned, particularly in the case of the Fed, we heard the same story. In other words, we look at the data, and then we will decide if we're going to cut interest rates further. That's all. It's very interesting, however, that Powell emphasized that the acceleration, or rather the steady inflation in the United States, is now reflecting tariffs, something that the Secretary for Finance point blank and absolutely refuses to accept because, of course, it doesn't suit them. So where we go from here, I'll go straight to the jugular. I'll go straight for this. And that is, don't buy American equities. There are signs by a lot of people, rather than little potatoes like me, to tell you that the market is hugely inflated by the AI. We have 5 shares accounting for 30% of the capitalization of the S&P.
And if I may come in here, do you see the risk of US-China trade tariff now, getting reflected in other commodities like gold, which is now about $4,200, silver, which is around 52. Is that something which you're looking at? And do you see, and do you have a view on where the gold is headed to?
Well, you're asking me several questions. Okay, first, where gold is headed to. Where gold is headed to, where all kinds of assets that are supposed to be, let's say, haven from uncertainty, at the end up down. Okay, in the same way that the Bitcoin, that is supposed to be the par excellence asset, for risky times, in the last 3 days, at least the Bitcoin itself, the main Bitcoin, lost 5% of its value. Thanks very much. If that's provide me safety, I will look somewhere else. Now, also, the gold, the price of the gold has gone up, and the market just refused to see this because the central banks bought a lot of it. Once they have stopped buying, that is a very important, let's say, security aspect behind that. Now, where do we go with the trade policy? I will repeat this. Nobody knows. Never mind me. Where we go, it can change at any time. Meaningless. So concentrate on something which is very, very certain, and that is the overvaluation of American shares in the S&P. Stay out of that. Concentrate on some of the Asians that have been doing exceptionally well in US dollar terms versus the S&P. The majority of the major Asians have, except India, unfortunately, have outperformed the S&P. Had you put your money at the beginning of the year, you'll be making much more in places like Taiwan, in places like Korea, than you would have done even in the case of Hong Kong, of all places, for God's sakes, and Hong Kong is linked to the US dollar, than you would have done if you had put your money in S&P. Particularly now that repeatedly major investors and major institutions, such as the IMF, say, really be very careful.
Okay, Andrew, great to have you on the show. Thanks as always for your time and insight. That, of course,